Good afternoon, everyone. Welcome to the recap. I'm Evan Lazarus, and I'm CEO of T3 Live, filling in for Scott, the Red Dog Redler, who apparently is lost upon some mountaintop. So where do we begin? Quiet week, as we anticipated. I talked a little bit this morning in the call about a shortened holiday week, obviously coming into the new year. There's not much more we can say about the market other than wow, huge percentage gains for the year. And in a minute, as we jump into some of the charts, we'll look at some of the weeklies and even monthlies, just to put it into perspective how incredible the year 2013 was for the market and a lot of individual stocks as well. Before we start, I wanted to take your attention just to the homepage of T3 Live for a second, because there's a lot going on here, and maybe you know, maybe you don't know. But we obviously have Redler's 2014 Market Outlook Report, which comes out in early January, so make sure you check that out. Lots of good information in there. In addition, we've done a pretty in-depth video series with Scott and John Darcy, two of our more featured contributors, about the year that was and about the year that could be. So make sure you spend some time going through a lot of these Outlook videos. And if you click on, on the home page, you'll see some of these videos that go back, and make sure you do yourself a favor and go through most of them, because there's just some really good information on there. So lots of stuff going on here as we approach the end of the year. So let's jump into some charts here. Let's talk about the market. We're going to start with the SPY. Just get a general sense of the overall picture of the landscape. Now, I always like to look at weekly charts, and the reason that I look at weekly charts is because it kind of puts the whole perspective in a one quick snapshot for me. It's just a very quick and dirty view of what's happening. I can see trend. In this particular shot, you can see a rising 8, a rising 21 above. What is an upsloping 200, very, very bullish. We end the year very, very strong. And I suspect even though we may tick down a little bit or possibly, pop into the final day tomorrow of 2013, the year that was, here's January. And you can see really outside of just May and June, basically every dip was bought. And if we go a step further and we look at a monthly, you can see this, where each candlestick represents one full month of trading. From the beginning of 13 into the end of 2013, we had, two very, very, insignificant pullbacks. So 2 down months, really, out of 12, 10 out of 12 positive months. You're not going to see really much more bullishness than that. And as you can see here on the monthly, this rising 8, for those of you who have taken the active trader course and participated in some of our education, you sort of know what this means. And this is rising, holding the 8, and generally when markets and stocks hold a rising 8 or trade under a declining 8 period EMA, even on a monthly, it's a sign of something fast and furious. And it wouldn't surprise me early into 2014 that we saw this market really start to pick up what we call that curve. You see the curve happening here, where it actually, the rate of rise starts to increase with a little more drama and a little more slope. So we're keeping an eye on that for January, February, into Q1 of 2014. Now, do we have guarantees of that? No, we don't. But this is something very typical in technicals. You saw a good example of that here back in 08. You saw as it held under this 8 right here, you can see the markets really started to free fall. Well, it's the same concept here, just in the other direction. So we're going to keep an eye on that idea early into 2014. So. But as traders, you got to focus on specific stocks. And those of you that are, active participants in the VTF, that there's always, the usual suspects, a lot of high beta names. But this year, I think we've done a better job of trying to broaden our horizons and our stock selection. I talked a lot about that this morning when I covered the Off the Charts newsletter. We looked at Yelp, and we looked at Southwest Airlines, and we looked at GE, just to name a few. Not necessarily your typical momentum names, if you will. Whereas, I know there's a lot of Apple and Amazon and Google and those, those high flyers, because there's lots of opportunity there. But it's really been a very, very diverse year for traders in terms of where you can be. There's been opportunity, an abundant amount of opportunity across the map for the better part of the last 12 to 18 months, really. So as we wind down into the end of the year, you can see a little bit of profit taking here in the S&Ps. I've moved down to a daily chart. Friday into Monday today, a little bit of selling, but again, nothing that I would, worry about into tomorrow or the next couple of days. As the market, it's finishing basically at its highs on the year. And why not? It's been basically a 52-week event from start to finish, from January of 2013 into December of 2013. And as we go around the horn, here's Goldman Sachs, another stock that, as of late, again, go back to that weekly, get a bigger picture. We saw a nice breakout here in Goldman back through the 170 area just a few weeks back. Looks like it's trying to consolidate up here, a few more weeks up here. You might see some more gains to be tacked on into some of the banks. We talked this morning about M&T. M&T, again, highlighted in off the chart, so we're keeping an eye on M&T, for higher prices. So keep an eye on some of those bank names. The usual suspects, the Apples of the world. Apple had a big bounce. Apple had a very, very interesting year relative to the market. For the better part of 2012 into let's say the first 6 months of 2013, heavy selling. But we've rebounded nicely, and I think now we're in a position of, this stock, as much as it's a market leader and it captures a lot of attention and eyeballs, it's at a point of inflection, and we're sort of right at that 50% retracement of that whole move down. So I think this stock, again, going into the first quarter or even the first couple of weeks of next year, still needs to be taken with a little bit of a grain of salt, maybe some more time there before something substantial builds. But what did we see into the end of this year? Twitter. It was a Twitter show for the last 2 weeks. Twitter going from 40, to as high as 75 2 days ago. Huge momentum move. Again, look at the power of that 8 EMA as the stock pulls back here through the middle part of December, holds the 8 EMA, and then just thrusts right to the upside. Goes the slope here just goes vertical. And again, the faster they go up, the faster they go down. We've seen this trade time and time again throughout the years. So at this point, I think Twitter is now probably really more for the intraday trader only, for those that are, a little more crafty in terms of their timing, that are working off smaller time frames, 5, 10, 15-minute charts, if you will. As I think this stock has sort of seen some impulse and now needs some time to sort of correct and consolidate and possibly become a little choppier until it sets up for what could be another move. Facebook, again, Facebook, one of those stocks that really interesting story. Obviously, the overall story with Facebook is interesting, but the stock itself, and this was part of Scott's market outlook for 2013, just utterly, blasting off of an earnings report, taking it from roughly $20 or even earlier in the year, the low 20s to as high as $60 just a couple of days ago, and some selling starting to creep back in here. So some of these momentum names, I think it's probably wiser to be a little more tactical. Make sure you're tuning into the VTF for these types of trades. But I think the overall theme here for the recap is that you need to think about, as I always did when I was trading more actively, you need to think about what it is you did well in 2013. It's not just about how much money you made or how much money you should have made, as that's sort of a common theme with aspiring or more novice traders. What did you accomplish? What did you learn this year? What did you see that you could put in your mental register that you could use again going forward? How did you become a better trader? How did you become a smarter trader? Why did you do some of the things that you did? Being a talented, profitable, successful trader year in and year out is really a learning curve. And it took me a long time to figure that piece out. But when I finally did, that's when I started to explore my potential as a trader. And Scott and the rest of us at T3 Live, I'm sure, would tell you the same story. Think about 2014 in terms of how you grew, what you learned, what you saw, mistakes you made that you've learned from. Because unfortunately, as much as we can expedite your learning curve through our education and our mentoring and our newsletters, there's no better teacher than time. So think about the year that was, think about how it relates to you and what you want to accomplish in 2014. And I truly hope that, for those of us at T3 Live, myself, my partners, and everybody, all the contributors and all the people that make this site move, I hope that it was a beneficial year for you, and I hope that we were a part of that. And if not, please feel free to let me know, let us know. You're always welcome to email me, Evan at T3Live, or customer service at T3Live. Give me your feedback, feedback at T3Live. Any of those email addresses will get you to the right people. I want to know what it is you learned this year, how it is T3Live was a part of that, and what we can do going forward to help make 2014 a richer year for learning and to help you become a more profitable participant in the market. So with that, I bid you a fantastic 2013. I hope it was a great year for you. I know it was for us, and an even better 2014. Have a nice night, everybody.